Hello, I'm Ian Kelly, the tax partner at Davies Tracy, and I'm going to spend a few moments sharing with you an overview of the 2018 budget, which is scheduled to be the last budget before Brexit. Under a little bit of pressure from the Prime Minister's announcement of the end of austerity and forthcoming Brexit, the Chancellor nevertheless exuded an air of confidence both verbally and physically in announcing his budget measures. That said, his scripted jokes were rather laboured and showed once and for all that really politicians shouldn't attempt to crack jokes in public or Parliament. With growth expected to average around 1.5% over the next few years and lower than expected borrowings, the Chancellor seemed to take every opportunity to launch some form of giveaway in this budget. Cynics and his critics may well say that these two of his bigger elements of the budget were designed to promote business and personal expenses in the immediate aftermath of Brexit. The Chancellor announced an increase in the annual investment allowance from £200,000 to £1 million for spend between 1st January 2019 and 31st December 2020. And there was also good news for personal taxpayers, with the election manifesto pledge of a personal allowance of £12,500 and a higher rate tax threshold of £50,000 introduced from April 2019 rather than the intended and projected April 2020. There was some help for smaller businesses in the High Street with some business rates relief, and locally the South Tees Development Corporation, which incorporates the old SSI site, will have up to £14 million of capital available to help in redeveloping this area. There was an announcement, previously leaked of course, with regards to the additional spend for the NHS, and there was some easing of the introduction of universal credit. The expected announcement to extend the off-payroll working, or IR35 rules, from the public sector to the private sector was introduced and announced, and will take place from April 2020, but only in respect of large and medium enterprises. There were some tweaks to capital gains taxation in respect of entrepreneurs relief, which allows for a lower capital gains tax rate of 10% to be available on the sale of business and business related assets. For the sale of shares in a personal company, there is an immediate change from budget day with the requirement that there must be a 5% holding and an entitlement to both distributable profits and net assets. The qualifying period for entitlement to claiming entrepreneurs relief will also change from 12 months to 24 months with effect from April 2019. Recent budgets have seen the Chancellor launch a tax on buy-to-let landlords, and this time he turned his attention to the owners of private residential dwellings. There is a form of relief from capital gains taxation where one's home is let before its sale, and this is known as lettings relief. With effect from April 2020, this relief can only be claimed where there is a shared tenancy arrangement between the property owner and tenant. There was also a further reduction in capital gains tax reliefs with regard to period of ownership. For some considerable amount of time, this relief allowed for exemption to be claimed for the last 36 months of ownership, and which recently has been reduced to 18 months. Also with effect from April 2020, there will be a further reduction in this relief from 18 months down to 9 months. Every budget there seems to be a rumour emanating that the Chancellor will clamp down on higher rate tax relief on personal pension contributions, and this year was no different. However, the expected limiting of relief to basic rate tax did not arise, and that is good news for pension savers and the pension industry. As always, the devil is in the detail in budget speeches, and I would urge you to take advice before acting on any part of the budget announcements.